Hello and welcome to the Pipnotic Symposium on the 26th of February 2018. My apologies for getting this out. It's been 10 days. We're currently in the process of selling our home and all of our belongings because we're relocating to Asia. We found an amazing school we want our kids to attend, and we want to move away from this terribly cold climate and very expensive city here in Copenhagen. So we'd like to have a simpler life, have less stuff, and focus on the more important things, which is ultimately being together as a family in a beautiful environment where our kids can get a great education. And so my activities in relation to trading will completely remain the same. I will trade, probably have time to trade more than I currently do, and I will continue programming as I always have done, and my wife will continue to write. She resigned from teaching at the design school here this week. Early last week, and she's going to focus on her book projects, which is good. She's on her third book, and that's going very, very well for her. So she'd like to focus on that exclusively. So super exciting, very exciting indeed. Okay, so if we focus on this, we have, I'm not exactly sure when. Okay, so I think the 16th was where we were last symposium, which brings us to here. So if we focus on this trade, this American dollar to Japanese yen, and on, we can have a look and see what's going on there. So if we drag this onto the price chart and have a look, let me move this down, you can see that we bought here. Let's mark this, sorry, we sold here. We move this off and we'll have a look. Was this a good idea to sell here? If you look at this, you can see there's an awful lot of stuff going on. And something that you want to notice is actually you want to focus on something that you cannot see or not directly see when you look at a price chart, and that is liquidity distribution. You can see the price move down from here. We moved higher, we moved down, we moved up, we moved down, and price is kind of moving sideways like this. But if you look at this here, which is very interesting, you can see that price managed to wriggle up here and then it dived off very quickly. What does that mean? Well, that means that when price came back here, it managed to attract some selling just up at around this area. So if we move this up here, well, this is going to give us a pretty good indication of where we want to start to look to sell. So this is the beginning of the sell zone here. So trying to sell in here and hold it. These are not set and forget trades. You can't sell. Let's see where we tried to look at. We sold here. We're trying to look at this little micro supply. It might look like a good one. We have a low, a high, a low, and a high. So we have an upward sloping trend line, and it broke. It's not good enough. Why? Because we're not focusing. We're focusing on what you can see, and not what you cannot see, which is liquidity. And so when you see something like this and a big drop, you should automatically be going like this. Say, okay, this is the sell zone. This is where it starts. This is where price came to very accurately. We had 1 test, 2 tests, 3 tests, and on the 3rd test, price managed to break away. And I'm going to open some slides. I've been slowly keeping notes here. I'm just going to pause the video and open the slides. Okay, so if we have a look at this, I'm going to continue adding to this, but we have this, number one, this lovely quote from Søren Kierkegaard, a Danish philosopher: "Today is to lose one's footing, momentarily, not today is to lose oneself." Absolutely spot on. Has a lot to do with why we're moving to Indonesia as well. Moving on, here we have why trades are winning and losing, and we're going to look at some commonalities between winning trades and losing trades. If we first of all focus on the losers, there are very clear reasons, as we have illustrated very clearly throughout the course of the past 3, this being the 4th symposium, is there is no concept of where price has been. And so if you look at this price chart and you ask yourself the question, when price comes down here, where has price been? And when I say been, I mean pulled back to, found liquidity, and moved away from. This is super important. And so it means selling here is being completely oblivious to where price has been. I mean, we have this one here. This is kind of a similar thing here. This is kind of testing here, but you wouldn't want to sell here because price has been, it showed like an area of equilibrium, or a period of equilibrium here before price broke away. So this is not a nice area. There's a lot of trading in this area telling us that there is indeed a balance within supply and demand. This is not what we want to see. We want to see the opposite. We want to see like price pull back. So we want to see price kind of pointing to the edge of the pool of liquidity that we're looking to trade. And we saw that just up here. And this is where price came to. Okay, if we have a look at another one, not focusing on on current price. Yeah, this is kind of a big deal in relation to trading on any time frame. And so, I mean, if we're looking at trading all the way back here, taking something over here, of course we have to ask ourselves, where has price been not been? And price has not been above these highs here. So we're kind of moving up into here. But if you're going to be focusing on bleeding edge price, then you're going to want to look at the rightmost edge of the price chart. And so we're trading right in here. So we're going to be trading around here, looking to sell at the highs, beginning of the sell zone, just here, or starting to buy demand that's forming below price. So you always have to keep in mind what price is doing here and now, because the price here and now is ultimately a combination of supply and demand, but also intraday sentiment, which is super important on where price is going to go throughout the course of a given day. You want to focus on trading. Sorry, a lot of the losing trades, we're not focusing on the major flows. We're actually trading against them. So if we go back to the price chart, if we're looking to sell here, this might not be a very good example, but you can see that, I mean, price went down here, price pulled back to here, price got into it. So we're entering a buy zone here, and so price is reacting on that, and then we're selling against that. So that's potentially a little bit risky, especially because, I mean, these setups that we're looking at are pretty intraday, and so you want to be sure that once price reacts here, you want to start to buy. So if we go down here on the hourly chart, once this happens, once you get reaction, so you have, I mean, the character of price starts to change, where price dumps off, and then we kind of start to shoot higher. Then you want to start to look to buy until we reach a supposing area of supply, or the beginning of a sell zone, which starts just here, as we saw earlier on. And then we have, I mean, poor quality supply and demand. Again, if we go back to this example, I mean, this is very messy supply. A lot of trading in here. We have many periods of supply here. Let's have a look. Sorry, agreement 37 period. That's a lot. You don't want to see more than about 3 to 5 in and around here. So that was perhaps kind of a pretty poor area to start to sell. Okay, no concept of what is driving price, and here we're focusing on things like interest rate swaps. So is this green or is it red? Red, we're buying, green we're selling. Also going to the major time frames and see what's going on. You can see that price is actually kind of broke below, so we're probably going to start to look to see price move lower if it comes back up to here. Alternatively, find some liquidity here that's going to hold price and potentially see it move a little bit higher. So you've got to be paying attention to this stuff. Even if you're trading on the 5-minute chart, you want to know what's going on the daily chart, because this is definitely going to affect the way price moves. And so we have this here. You can see price has moved. This is the pullback. You can see here price dropped off. It's pointing to the edge of this area, so you don't want to sell for a price any cheaper than the highs of these pullbacks. Price almost made it. You have to be patient. You have to wait, because if you do, you'll be rewarded, as this test was, showing us where it is. Price didn't make it. We had a huge sell-off. This is good because it's cleaning the road. We had another test. Price is moving. We moved away very sharply. We came up. We formed a high that is below this one here. So we have supply that's currently kind of holding price. As a matter of fact, we have a couple areas of demand that we'd like to move through. But I mean, price reacted very nicely here at the beginning of this sell zone, and it moved away from there. pretty forcefully. We moved through this mess. See, we had the child, we had moved back to the parent here, but ideally you can see that we want to see price to come down to kind of this area here before we start to buy, kind of around here, in here somewhere, before we start to buy. But if we have supply forming above price, you're going to want to be a little bit careful. And so perhaps throw the strength indicator on the chart for the weekly chart, and pay attention to the major flows, and move in that direction. We have a downward sloping trend line here, so we're in a technical downtrend. Let's draw that off like that. We have a downward sloping trend line, so you want to be selling supply here in anticipation that it's going to move, bounce off this, go down to the kind of this area here before we start to figure out what we're going to do. But we have this price is currently out of balance. In order for it to return to parity, it's going to have to come back to kind of here, or at least in this area around here. So there's plenty of room for price to move lower. And then we'll come down here, and then we're probably going to, who knows we have no idea what's going to happen actually. But the timing, you got to pay attention to what's going on in these major time frames. Trading zones not exhibiting strength. I mean, this is very clear. If price is moving away from an area, we sold here. Is this strength? No, it's not doing anything. You can see when price left, it came right back to it. Once, twice, 3 times. So this area has been tested 3 times. And so this is not very convincing. This is convincing. Price came down and it held away. And it started, since here, price came up here. We sat on it. We started to move high into this area of supply just here. So this is a better release. I mean, there's nothing here that's very interesting to us. We have the checklist would have failed this. Too much trading, price left. So not a good area at all to be selling. Have a look. Poor trade management. Yeah, this is interesting because despite the fact that these are only one-to-one trades, if we would have managed them a little bit differently, we could have got the risk out and maybe taken a bit of profit on almost all of them. And this is because the price is often going to the area, our entry, and it's reacting, and then it's bouncing around a little bit before we actually it's moving into profit before we actually hit our stop. So price came here, we came down here, and it went up here a little bit. And so I mean, we had a reaction in here initially, but I mean, price was not in the area. Actually, I think the spread got us out on this one. This is kind of the Turkish lira, American dollar. So we got spreaded out here once price came down here. It's pretty far away from our stop actually. And so I mean, you want to really be paying attention to this. You could be moving your stops to break even. If you're comfortable with that, that's completely fine to do. But I prefer just to pick the areas where price has been back to, or just on the other side of that. And we'll see that in these examples here where these trades have been taken. So anyway, this is kind of the losers. And then we have the winners here. We have like realistic targets. We're taking profits. We're not waiting for price to move 1,000 pips on a 20 pip risk, because if you're trading intraday, you have to get out at realistic areas of opposing supply and demand and not get greedy or unrealistic. So get out at opposing supply and demand. Don't expect price to bounce off an area and keep going the other direction. It won't. So be careful about that. So if we have a look at this one here, we sold here. This is the area we just looked at. Let's put a line in there. You can see this is a very ugly area of supply. Why? Because there's a lot of trading in the area. When price left, it came back very quickly. We kind of drifted sideways for a while below the area. Then we finally sold off. But then when price came back here, was this the first time back? It wasn't. It's been back a lot. In the past, we had 1, 2, 3 tests at the bottom of this area, and in the meantime, market flow has been changing, and now we have demand in control on its way up to this area of supply, which is of course going to challenge it. So this one is a fail. We have a look at the next one here. This is maybe one of the first ones where we started to trade at some pretty interesting areas. So this is the trade that we talked about just a second ago. I mean, here's where we bought, and then we said, well, what about selling here? And why would we want to sell here? Well, you can see this is a great area to sell because this is the very beginning of the sell zone. We got out of the trade, and the trade exited here. I think maybe my trade management tool got us out of that, unfortunately. But I mean, the trade was that was a fine trade. We got in. There was virtually no drawdown. Price came in our direction. We got a profit, rather 1-to-1 there. And yeah, it looks like that the stop loss was moved. Yeah, the stop loss was moved to break even. So this is the trade management close. So price came down here, and the trade management utility got me out of this trade. But a really good example of that. Price did not move beyond that level following tests. And we have a look at the next one. This is also the American dollar Japanese yen. Let's mark that off just here. So we saw this and we said, well, we want to buy just here. Let's zoom in a little. You can see here very nicely. Another example, when price went up, we had all of this. It's clear on the hourly chart actually. Price went up and all of these wicks poking. What's this doing? It's showing us where you want to be buying. You don't want to be buying here or here. You want to be placing your entries around the lows of the wicks, maybe plus a couple of pips for spread. And this is what we did here. We had a beautiful fill, very limited drawdown, and price went up. We got pretty close to the target. And then this one was also managed by this little utility. I should actually switch that off and leave it alone because it's interfering with the trades. I mean, it hit the target here. We went up. We came back to the entry, found a little bit more liquidity just down here, and this is what brought price up to the target. So that was another interesting one. We have another one here. This is also the dollar yen, so the same pair, exact same strategy. We had a 1-to-1. So we bought here, the stop was here. So why did we buy there? Let's have a look. Let's move it down to the low. And you can see again. So you had price move higher. We had these lows here. You can see we had a test. And then price did not manage to close below that level, telling us that we have an interest in holding price above that area. And then notice, this is the first test, hit the target. The second test, where did price go to? I'll give you one guess. Pretty much the lows of this wick before moving higher. And why is that? Well, that means that this, what you can see here, this hourly candle closing and this one opening, it's a retracement, it's a pullback. So it's micro supply and demand, in this case demand. How price goes up, closes, have a wick, this one opens, it goes up, goes down, and so we have a high, and the high in this looks like this. Which looks like what? Oh, this looks like this entry just here. So you can buy here. Your stop is going to go down here, which makes it a little bit difficult, or you can put your entry at the low and you can put your stop in where? Black space, liquidity. So you put your entry here, price is going to have to really struggle to move through here because this is the beginning of the buy zone. So there's going to be a lot of stops here, and you have to think about that. A lot of uninformed traders are putting their stops just below these levels, just below these swing lows if you're buying and these swing highs if you're selling. And the problem with that is that the big banks know this, and so if they have an order that they need to fill to buy, they're going to be looking for someone that is going to sell to them so that they can buy. And so sell orders, stop losses, are also people selling, and so they're going to drive price lower. They're going to flood the market with liquidity by hitting all of these stops. This liquidity is going to be available to these big institutional traders, and they're going to start buying it. And so putting your stops just under here or just above here is a really bad idea, because this is exactly where all of the other people have their stops. So if the bank needs more liquidity so that they can buy to drive price higher, then of course they're going to drive price lower, hit all those stops, dump a bunch of liquidity in the market, and then they buy it all up again. They suck it all up, and this buying moves price closer to their target. And so don't fall into the trap of putting your stop just above these highs, these previous highs, or just below the lows. And if you look at this one here, I mean, the people will look at this and they'll think, well, I like this here. Maybe we'll kind of box off this whole area. We'll go like that. Then we're going to put our stop just above. Or you could do that, but it puts you at risk. Or you could either look at this wick on a 5-minute chart and find the micro supply in there and put your entry in there. And this is probably where price came to. As a matter of fact, we can mark it off like that. Go to the 5-minute chart and we'll have a look, just for the sake of example. Let's see if we can find it. It's over here somewhere. There it is. And so this is where it is. So price went to, so you can see here we had price moving sideways, and we had this candle moved away. So ideally, I mean, this would be a green candle. This candle here is not within range of the previous. This one is here, so the candle would be like that. Hope you can see why. So the entry would be around there. If we zoom back out again, we see what that would have done for us. That's pretty close where price came to. It came back, and we're in the top half of the wick, because that's where the micro supply was located, and we're just looking for supply signatures. This is very important. You want to see the signature of supply and the signature of demand. And we saw the signature of supply up here, but going to the smaller time frames. Sorry about that, little turkey running through. And so we went as high as we could. And ultimately we decided, you know what, we're going to put our entry at the very high of this wick, and we're going to be done with it. And we know that if price comes up there, let me remove all these so I can see actually where the high is. Oh, pretty close to it. Yeah, we put it right there, just above the high, minus a pip or two by the looks of it. This is where price came to. So focus very much so where price has come back to. Price came down, it came back to here. So this is the highest price that price came to in order to move lower. Look for those. Look for those. Let's have a look at a couple of orders. He's got this one going on. This thing has been going on for a long time. We bought this back here, 15th of February, so a while ago. Kind of sitting on it for a while. This is, I think, a weekly trade. So we're trading this one here, and what I like is that we're getting some accumulation candles and big wicks down here. This is good. And I've also got another entry down here to buy. So should price move through here, I'm going to look to buy here at the lowest low, which gives us a bit of protection for our stop. There's a stop, and the target is, what's that? That's 11. I'm going to move that up here. Wrong one. There we are. So 23. Okay, so this is what we're looking at. So here's the stop down here. Here's the entry. And we're also buying here, and I like this. I mean, things, it looks like they're slowing down. We had a huge rejection. Price came up, it flew up there. We had a huge move. What did we move? We moved about 150 pips, poked into here, and we had a big move higher, closed, and we came down. Now we're accumulating, which is good. Accumulating is good, especially when it happens at major demand, which we can see going on here. We have the interest rate swaps that are in our favor, so we can hold this for a couple of weeks. And if you have 100 lots on or whatever, then you're laughing every time the clocks strike midnight. And so when we're sitting here now, we're just waiting patiently. We don't really care what happens. We have some protection for our stop. Should it come down here, there's a very high likelihood that we have more buyers are going to dive in. We have a lot of stop orders located around here. You can see we've got mine, among others. We probably have a bunch of other ones as well. So if the banks want this to go higher, then they're going to be driving price lower, probably than these micro demand areas. Let's have a look what they look like. Here we are. There's the buy limit. So they're going to be looking to kind of drive price kind of down. Here it is. You can see we have this range. The price is moving between here and here-ish. Okay. And so price has gone up, down, it's kind of accumulating, kind of starting to move higher. So we have like this signature of demand forming. We have this price pops out, and then we come back into it later, which is where we got filled, and then we went up. So if we go to a bigger time frame and look here, you can see that, I mean, people buying here, where are their stops going to be located? Well, they're going to be located here, here, and here, and here. Some people are going to have their stops all the way down here. Bad risk reward. And so, assuming that none of this exists, I mean, technically, just theoretically speaking, we'll just draw a quick example of it. Price goes up, people have their stops here. Price comes down. If a lot of people are looking to buy here, they want to buy 1,000 lots or 5,000 lots, but they can only get 1,000. I mean, it's going to be in their interest to drive price lower here to trigger all of these stops. And this is going to flood the market with liquidity. The institutions are going to get this liquidity. It's going to be used to fill their orders to buy. And so often, maybe a lot of you have already experienced many times that you put your order in to buy or to sell, price comes down or up to your level, you get filled, starts to go in your direction, it goes against you, it hits your stop, and then it continues in your direction towards your target. And this is exactly what's going on here. Is stops are being triggered because this is the institutions seeking liquidity to fill their orders. And so, yeah, you and I are on the other end of that unfortunate situation. It happens every single day. Every single day. So that's what we're looking at there. And I have a bunch of other orders. They're all in here. I've got tons of orders and they're just sitting. If we have a look at a couple, we have this one here, a buy. And this is interesting because, I mean, price went up. Let's have a look at this on the hourly chart. So price went higher, it went up, it went down, and it started to move higher. You see higher lows. This is like the signature of demand, and price kind of broke away. And then we have this. You see how we have this going on here. So I'm going to put this like around here, because I know that once price comes back down to here, it's going to start to trigger stops, because a lot of people are going to be looking to buy around here, and this is probably going trigger some stops, put some some bullish liquidity in the market, and then people are going to start buying. So that'll be super duper. Okay, and so whenever you put it on an order, put it in the market and then ask yourself one question, and that question is, where are the retail traders going to have their stops located? And then move your entry to roughly that area, because that's going to be likely the price level that the big banks are going to push price to find that liquidity, rather to hit those stops to give them liquidity they need to support their trade, to fill their order. So you're going to see that. I mean, here it's very logical on the hourly chart. You can see, or even the 4-hour, you can see, wow, we have this nice continuation pattern. The clue in this is this candle here. It went up, closed, came back down, we found liquidity, we had a nice push higher, price came down, we tested it, we went a little bit deeper to the lows here, and this is where we found it went higher. So why wouldn't we do that? We're going to do that. We're going to put it right like that, plus a couple of pips for the spread, and then we'll see what happens when price comes back down there. So we're probably going to get a little bounce there as a result of what I was just talking about. We have 1, 2, 3 periods of accumulation. It's kind of a long time, not really, but it's a long time. It's not like what we've been seeing, what we saw on the Kiwi. Where is that? All these symbols. Where's the Kiwi? There. We saw on the Kiwi on the daily chart a while ago. I have to go over here. Here. It's not one of these. Or one of these. These are nice. And the clue here is, you see this one that left? It's pointing to where your entry should be. So your entry should be there. Plus a spread. Price came to it. Once, close, once, twice, 3 times. On the 4th time, kind of reacted on this chart, and then it cut through it. Now it's gone. So, and then this one here, we had the same thing going on. Price came to it. So this is really nice. We have 1 period of accumulation, 1 period of accumulation. On this one, we have more accumulation. We have a lot of accumulation here. So on the daily chart, I mean, there's 3 periods of accumulation. It's kind of so on the 4-hour chart, we have 3 periods of accumulation. It's kind of a long time. And so you, in such a set case, you want to put your entry where everyone else has their stops. People are going to be buying here, their stops are going to be here. I would feel more comfortable putting my entry here at the bottom, where price will likely be driven to get price to move higher. So try doing that from now on, at least for on the demo account that you're trading here next to us, and see how that does. I think you'll be very positively surprised. It's a fascinating study. Yeah. Let's see what else we have. We have this one here, same thing going on, where price, we see all these wicks here. This is just like, these are pullbacks. Price goes up, comes down, leaves, goes up, comes down, leaves. So we have all of these areas, buying areas here. There's a first shot, second shot, third shot. But price is pretty far away from there from now on, so we're going to have to wait and see. But we do, to the upside, we do have this. We have price, come on. We have this up here, which brings us pretty close to here. So I don't know, we'll have to see what happens there. But we're not selling here, because price is going to go through that very likely, and it's going to probably start to react when we get here to the 127.93. So keep that in mind. The Aussie CAD, what do we have? We got this one here. Here's another situation that we've seen before. What's this? What's this here? It's telling us to do this. And I haven't changed these because I want to show you. These. You look at this. So we could put at the lows here. Pay attention to, we have exactly that. We have price going up, coming down, finding liquidity, pop, accumulating, going up, coming down, up. It's already been back to this level, and so we don't want to be paying a price any more expensive than the low of this test. If we go to daily chart, let's have a look. Looks like that. You can see this would probably be where you could also probably look for a reaction here, just around here, the low of this one here, or you could go to the smaller time frames, and let's look for that. Let's go. Okay, so if we go back until we find it here, yeah, you can see, I mean, I wouldn't want to put my entry any higher than this, so I'll leave it at that. Boom. Like that. I'll leave it there. It looks better. And we protected. The stop is below this. This is like a micro demand. So this is interesting. So we're going to leave that like that. But you can see, I mean, on that dollar yen trade, not trading a lot, but we've been trading that pair actually quite a lot with these good trades, and we're getting a lot of really interesting price reactions. And when you're doing it like this, I mean, putting your entry where other people have their stops, or then you can trade intraday and just play the swings as we've been seeing here today. It's absolutely fascinating, really fascinating. And here's another example. We have this one here. Most people would think like, you know, I'm going to buy there. I'm going to do like that. Look at this. Is this pretty or is this not pretty? It's not pretty. We have parent, child, but even below that we have something else going on. And so of course you would want to put your entry below this, because yes, I mean, price goes up, it leaves, it comes back down. Where are people going to have their stop orders? Below this one, obviously. Price pokes just below it, we trigger a lot of stops, and then you see the reaction of those stop orders getting hit. Boom, price bursts north. This is a really good indication that that we've indeed hit stop orders, or something similar like that. So price came back down to it like so. If we would have done something like this, we might have been saved, depending on the time of day. Maybe we would have got spread it out. But if you think, okay, if we're looking at this pattern, where does everyone else have their stops? They have their stops probably down around here, just below or at the low. Put it there and smile as price does this, because you'll experience this more and more and more. Okay, if we have a look at the Aussie franc, I don't know what this is. There's kind of a similar thing going on. This is daily demand. Let's have a look. Yeah, and if you look at this one as well, I mean, this one down here, this is a lower one. Price went up, came back down. So here we'd have a buy. There's a buy pattern here. Where would people have their stops? Just below here. So this is where we're going to look to buy once price comes back down there. And we have our stop on the other side of the swing low, which is great. When you have patterns this close to each other, price often comes down into the parent, through the child into the parent. We might see that, so we might experience a bit of financial and emotional drawdown if that does happen. We'll have to wait and see. We're still going to get a bounce there, I'm pretty certain of. We have this one here. Price has been down all the way down here. Here, tested once, twice, and this one through it. So you know what we're going to do? We're going to move this lower to here, just below this one here, plus a couple of pips. We're going to take that one because if price comes back down here, we're going to be looking to buy at the edge of this buy zone, which is good. So we'll leave that. And I think I'll wrap it up. And these other videos have been pretty long, and I want to keep this one a bit short. But you can see that for this next exercise, I'm going to add this to the list. As a matter of fact, winners. Put your entry where retail has their stops. Okay. There's another one we're going to add on there. By the time we're done here in 15 or so videos, we're going to have a super duper method, and you'll find that the method we have here is actually pretty much equivalent to what we how we trade at Pipnotic. It's pretty much the same stuff, but I feel that we need to walk through all of these exercises over and over and over and over again in order to help create some kind of associations to the process. And so us talking through the process of why we would put an entry here and not there, I think will really help. And I encourage you to do the exact same thing as we're doing, so that you can kind of experience the process of putting on these trades, looking for levels where others have their stops and putting your entries there, moving your entries to that level. And I think it's going to help tremendously. Anyway, I will leave that for now. If you have any questions, please shoot them off in the forum. And until then, I will see you next time. Thanks for watching.